Good evening, everyone. So, last chapter we discussed was depreciation. In today's class, we'll be starting with preparation of final accounts for sole proprietors. So, I'll just give a minute for online students to join. Whoever has joined online can just give me a thumbs up or hi so that I'll get to know you are joining. Okay, let's start the class. So, in earlier class, we have already discussed an overview of financial statements, like what are the components of financial statements. Can anybody tell me? Yes. What are the components of financial statements? Yes. The first one will be your balance sheet, profit and loss account, cash flow statement, notes to accounts. Right? We have discussed earlier also. This will be our components of financial statement. Now, I have even told this balance sheet will give you financial position, P&L will give you financial performance of the entity. Now, in this chapter, we are going to understand how balance sheet is prepared and why it gives us financial position. We have been understanding, right? Balance sheet will give us financial position, balance sheet will give us financial position, P&L will give us financial performance, right? We will understand the true meaning behind these words. Why financial position? Why financial performance, right? Why do we correlate these things with our balance sheet and P&L? So in this chapter, we will be mainly dealing with preparation of balance sheet, preparation of P&L account, and there is something called as trading account / manufacturing account. Sir, is this separate account, trading account and manufacturing account? No. Trading account or manufacturing account is not separate. It is part of P&L. Meaning, sir, meaning first there will be trading account, then comes our P&L account. First there will be trading account, then there will be P&L account. So in this chapter we will be understanding what is trading account, how trading account is prepared, what is P&L account, how P&L account is prepared, and what is balance sheet and how it is actually prepared. You in whole context, how we summarize, how we record the summarized transaction. See, in the first class itself we have understood. First we record the transaction, record transactions. This is done where? This is done in journals. Next step was classifying the transaction, classifying the transactions. This was done where? While posting to the ledgers. The next step was summarizing. The next step was summarizing, right? So in summarizing, we have seen trial balance, correct till now. Now, once you prepare trial balance, what is the next step? Is the trial balance final? No. Summarization, first step is trial balance. After that, we present the trial balance and categorize into balance sheet, trading account and P&L account, and the last one is cash flow statement. So summarization is also part of this. So the definition of accounting: art of recording, classifying and summarizing. Based on these three, we interpret. So it is called as classifying, recording, classifying, summarizing and interpreting the financial results. Correct? Yes. So in this chapter, we'll look at how these things are prepared. Right? So coming. Now we will break down this. There are two types of entities. One, non-manufacturing entity. One more is manufacturing entity. Non-manufacturing entity, manufacturing entity. Non-manufacturing entity means what, sir? Any entity which will not manufacture the products. Sir, for example, grocery store, supermarket, medical shops. All these are example of your non-manufacturing. Are they really manufacturing something on themselves, by themselves? No. What they are doing? Somebody else is manufacturing. They are taking those goods. They are buying those goods and selling it. Understanding? So manufacturing means what? We create our own product, right? Or we create a product which is already designed by somebody else. Correct? But who is creating? I am creating. So the person who creates the product is called as manufacturers. There are two types of manufacturers again. Sir, what are the two types of manufacturers? One, they develop and create their own products. Clear? The second one is where somebody else design and develop the product, but the manufacturing of that products happens in my business. Sir, meaning, sir? Meaning is simple. In first case, suppose say, I invented a formula as to how to make a soap. Now using that formula, I myself manufactured the soap and I started to manufacture hundreds of quantities of soap every day. So who designed the soap? Myself. Who manufactured soap? Myself. Correct? So in this case, the entire chain, that is design, developing and manufacturing, is mine. That means I am not manufacturing for anybody else. Now second instance, what happens is, suppose for example, Tata comes to your unit. Tata comes to your unit and says, see, you have so much capacity to manufacture. This is the formula for my soap. This is the branding we want. This is how you have to manufacture. This should be our final product. Okay, I took Tata's design, everything, formula, everything. I started to manufacture. Now also I manufacture hundreds of quantities of soap, but those soap doesn't belong to me. Whom it does belong to? It belongs to Tata. So the second transaction is called as job work based manufacturing. What? Job work based manufacturing. Job work based manufacturing, where the main person who has designed a product doesn't have the capacity to manufacture. So they come to me and use my capacity. Okay. And there is something called as OEM manufacturers. OEM manufacturers. Sir, what do you mean by this OEM manufacturers? See, OEM manufacturers is also something similar to job work, but not exactly job work. What do you mean by that, sir? What happens in job work is, understand. Tata gives me design, Tata gives me formula, Tata also gives me material to manufacture. In job work, what happens is, Tata gives me design, Tata gives me formula, and Tata also gives me the raw material used to manufacture. That is called as job work based manufacturing. That means what? I am not purchasing any single material. Every material is being sent by Tata themselves. Understanding, everybody? So here what is happening? This type of manufacturing is called as job work manufacturing. Sir, what is OEM manufacturing then? In OEM manufacturing, what happens? I will tell you. Tata comes to me. Suppose let's take an example of Tata cars, right? So Tata passenger segment company comes to me and says, see, I want this type of tire. This should be the measurement of the tire. This should be the width of the tire. This is how my tire should look like. And this is the rim which is going to be installed in the tire. Can you make such tires? If I say yes, I can make such tires. Then Tata says, okay, fine. You manufacture the tires and sell it to us. Here, understand, Tata is not giving us any materials. Tata is just giving us the design. They want us to manufacture by purchasing the material by ourselves. They are not giving us any materials. Here I am buying materials on my own based upon the design requirements, and I am manufacturing. So OEM, the full form is original equipment manufacturers. Original equipment manufacturers. In your lot of your cases, consumer cars especially your consumer cars, your tires of that cars, usually if I don't know how many of you are aware about this, but if you, whenever you buy a car, new car, and suppose after down the line like 5 years, you want to change the tire, it is very difficult to get the same tire which was put by your company at the beginning. Sir, why is that, sir? Because that was the tire which was put inside the car earlier was a customized design made by your showroom people. I mean your automobile company. Clear? So that customized tires will only go to the showroom. If you go to the showroom, you will get the original tires, but if you go outside, you are not getting the tires. Understanding? Because that customized tires is only going to the Tata company, but it is not coming out. There are multiple examples like this. Clear? Yes. So there is Kalyani group of companies which actually create that chassis. They manufacture the chassis. Understanding? So like that, lot of companies they create their own element based upon the design given by the company, and that element goes into the manufacturers who will use that element and manufacture the final product. Now here understand, the car is being manufacturing, car is manufactured by whom? Tata, but tire is manufactured by me. So will Tata buy the tires from me and sell it as it is? No, they will put it in the final product. Again they will manufacture a whole together a new product. Clear? See, sir, why Tata only can't manufacture? It can't manufacture because not everything can be manufactured and can be managed. It will become too much. So they outsource certain parts to be manufactured by others. Clear? This Kalyani group of industries, especially not chassis. I told chassis. No, I'm wrong. It is not chassis. I don't remember the exact axles. Sorry, yeah, axles. The truck का axle जो होता है पीछे, the axle behind the truck. If you see any trucks, on the rear wheel side there is axle coming out, that bulged thing and two bars like this. So that axle is manufactured by Kalyani for lot of companies. Lot of companies buy from Kalyani Industries. Understanding? So like that, lot of companies will manufacture a particular product for a particular vendor. Their materials is not given by the vendor. They themselves materials is not given by the customers. They themselves procure the materials and manufacture. This is called as OEM manufacturing, original equipment manufacturers. Why it is called as original equipment manufacturer? Because originally they are the one who is manufacturing that equipment, and that equipment will go into some other equipment and make a final product. Clear? Yes. So manufacturers will be 2 to 3 categories. One, I manufacture my own product. For example, Tata manufactures its own car, but the components of the car is being manufactured by somebody else. That somebody else is called as OEM manufacturers. Understanding? Sometimes what happens is Tata wants to manufacture a particular product, but it is not having a capacity, so it goes outside and says, can you manufacture? I say yes, I can manufacture, but I don't have the money to buy the material. So Tata says, okay, fine, I will only give you the material. So that time what what is happening? It is manufacturing only, but it becomes job work based manufacturing. Job work based manufacturing. So in case of manufacturing entity, somebody will manufacture or create or develop a product. Whereas in case of non-manufacturing, it is simple, sir, some trading. Non-manufacturing is nothing but, in simple words, it can be called as trading. Trading business. You buy a finished product, you sell a finished product. Clear? You buy a finished product and sell a finished product. Sir, now my question to you. Hotel. Hotel means restaurants. Your restaurants, are they manufacturers or not? Are they manufacturers or not? Sir, what question you are asking, sir? What manufacturing they have? No, you can. Hotel takes batter and they manufacture dosa. Correct or no? They create dosa, no? Correct? Hotels create the batter, they prepare dosa. So can it be called as manufacturing? No. This is not called as manufacturing. This is still called as trading only, but this is something similar to services. They are providing you services. Create. See, they of course they create batter and from there they create dosa. But the thing is, this process is not called as manufacturing. Rather, this process is called as what? In our language, cooking. Correct or no? Yes. So basically, to avoid the tax implication and all those things, this process is called as provision of services. What services they are doing, sir? What services they are doing is, they are converting this batter into dosa. They are converting this batter into dosa. That is their service. Clear? Yes. So your hotel industries will come under non-manufacturing entities. Clear? Now, sir, non-manufacturing entities only means trading businesses. No, it also means service-based businesses. Service-based businesses. Now, for example, I am a software company. I develop a software. Sir, you are using the word develop the software. So, does it mean it is manufacturing? Answer is no. It is not manufacturing. Again, here it is called as service, provision of services. You are providing a services. Development of a software is nothing but providing services to develop the software. So that is not called as manufacturing. In simple terms, if I tell you, manufacturing is the word which is used for creating or manufacturing a tangible item. A tangible item. I am not using the word tangible asset. I am using the word tangible item. Tangible means what? Which has physical characteristics. If you are trying to create something intangible in nature, it is usually goes under services. Provision of services. Clear? Okay. So in this chapter, we'll understand non-manufacturing and manufacturing. Sir, under non-manufacturing, there will be balance sheet. Sir, under manufacturing, there will be balance sheet. Sir, what is the difference? No difference. Sir, under non-manufacturing, there will be trading account. Under manufacturing, there will be manufacturing account. Clear? Manufacturing account. So, what is the difference? Trading, manufacturing. In fact, sometimes we use like this: manufacturing and trading account. Clear? Manufacturing and trading account. Because when I manufacture, I sell, no. Will I keep on manufacturing and keeping it to myself? No, no. I manufacture and I sell. So, your trading account captures your sales data as well. Okay, we'll understand in detail what is trading account. We'll understand, but first let's bifurcate. Clear? Next, it will have P&L. This will also have P&L. It will have cash flow statement. This will also have cash flow statement. It will have notes to accounts. This will also have notes to accounts. So, what is the difference, sir? The difference is primarily this one. Understanding? So, under manufacturing, there is one extra which is prepared, that is manufacturing account. Under non-manufacturing, only trading account is prepared. Everybody is following? Yes? Any doubts? Any doubts? If you have any doubts, please let me know. I'll clear it. I hope it is clear. Okay. Now coming back to trading account. We understood the overview now, right? Yes. Now coming to trading account. Now tell me, what is trading account, sir? What is trading account? Correct. We have been telling that it is trading account, sir. It is P&L account, sir. It is that account, sir. This account, all good, sir. But what exactly is trading account? What exactly is trading account? Trading account is something which captures sales, purchases, direct expenses, direct income, opening stock and closing stock. So trading account is an account which captures sales, purchases, direct expenses, direct income and opening stock and closing stock. Sir, what do you mean by this? It means simple, sir. In trading account, all your sales will be shown. Your purchases will be shown. Your direct expenses will be shown. Your direct income will be shown. And your opening stock and closing stock will be shown. So, in trading account, you will show sales, purchases, opening stock, closing stock and direct expense and direct income. So this is your trading account. Now let's understand how and where things are shown. Correct? Now you understood. How many items are 1, 2, 3, 4, 5, 6 items we have to show. Where to show it, sir? Simple. by sales by direct income by closing stock. Here, 2 opening stock, 2 purchases, 2 direct expenses. Okay, then if your credit balance is more than the debit balance, then it will be 2 gross profit by gross loss. This is how your trading account looks. Now don't worry, how this, sir, should we by heart the format? No, don't by heart the format. I will explain you how this account is prepared. Just hold on, just now understand the overview of the account. So what are all the things that is coming up? Sir, here we are showing sales, correct? We are showing direct income. We are showing closing stock on the credit side. On the debit side, what we are showing? Purchases, direct expenses. If you look carefully, your income items are coming here. Your expense items are coming on the debit side. Your income items are coming on the credit side and your expense items are coming on the debit side. Sir, you left closing stock, sir. You left closing stock. Don't worry, I will come to that also. Closing stock will always be shown on the credit side. Opening stock will always be shown on the debit side. Sir, should we buy heart it? No, wait. I will help you to understand the logic as to why closing stock will be shown here and opening stock will be shown here. Okay, now you understood the overview, general overview of this, right? Now I will break it down to you. Now let's take an example. Sir, I purchased 10 items for 10 rupees each. 10 items for 10 rupees each. I sold 6 items for, let's take 5 items. I sold 5 items for 12 rupees each. How much? 12 rupees each. Now my question to you, what is the profit? What is the profit? Can you tell me how much profit did I make? Did I even make a profit or did I make a loss? How many items I purchased? I purchased 10 items for 10 rupees. I sold 5 items for 10 rupees. 12 rupees. So did I make a profit or did I make a loss? If yes, whatever, profit or loss, tell me how much. Tell me how much. Yes, please put it in your chat box. I want to know the answers. Okay, one student is telling profit. Okay, one student is telling profit. One note for this democratic country. And she's telling 10 rupees profit we made, sir. 10 rupees profit is what we made. Okay, good. Then anybody else? Any other votes, please? Come on, guys, you can do it. A very simple question, no? You purchased 10 items for 10 rupees. You sold 5 items for 12 rupees. Yes, anybody else? Okay, so here also students are telling it is profit only, sir. And the profit will be 10 rupees. How did you calculate, Appa? Sir, how did I calculate? Is simple, sir. I sold 5 items for 12 rupees. That is 60. Right? Yes, sir. Right. And I purchased 10 items. Sorry. I purchased the same 10 items. I purchased the same 5 items for 10 rupees. So the difference 10 rupees is my profit. Correct? This is how you calculate it. ಹೌದಲ್ವಪ್ಪ? Sales minus your purchases will give you profit. Now, okay, good. Agree. Now my question to you is, what happened to remaining 5? How much did you purchase actually? Sir, you purchased 10 items. 5 items are sold. What is remaining 5 called as? What will happen to remaining 5? What is this remaining 5? Does it mean that they were never in existence? Does this 5 remaining 5 means that there was no existence of this 5? What is happening this 5? What is happening to this 5? This 5 is nothing but stock. Sir, what do you mean by stock? Stock is nothing but when you purchase some quantities, you sell some quantities, and whatever is remaining with you is called as stock. Is called as stock. Understanding, everybody? When you purchase 10 quantities, but you sold only 5 quantities, the remaining which are with you is called as stock. Yes, the remaining items which are remaining with you is called as stocks. Everybody is understanding? Yes? Now, my question to you was simple. You purchased 10 items, you sold 5 items, so remaining 5 you are telling it as stock. Yes, correct. Unsold finished goods is called as stock. Correct, right? Correct. Whatever you are not selling is called as stock. Correct, which is still remaining with you. You can sell it in the next year. Correct. So, what exactly happened? Look carefully. What is your actual sales? Sir, my actual sales is 5 units into 12 rupees is equal to 60. What is your purchases? Sir, my purchases is 10 rupees into 10 rupees 100. Correct or no? Now don't tell me, sir, my purchases is only 5 into 10. No. Your purchases is actually 10 rupees into 10, 100. You have purchased total goods worth 100 rupees. Correct or no? Yes. But if you want to calculate what is the profit, then should you compare this 10 with this 5, or you should compare 5 with 5? You should compare 5 with 5. Correct or no? You purchased 10 rupees for 100. You purchased 10 units at 10 rupees for 100. You sold 5 units for 12, total 60 rupees. Now, will you say that, sir, I have not made any profit because I made total purchases of 100, but I made sales of only 60? No. Because you also know, I also know. Sir, we purchased 5, we sold 5. On each item, we have making 2 rupees profit. Correct? So, your total purchases is how much? 100. Correct, sir? Total purchases 100. I agree. But not all this purchases has been sold. No, sir. Correct or no? Correct, sir. Not all purchases has been sold. So, when you want to compare with sales, you need to find out how much purchases are made which are actually sold. So, in this 10, 5 units sold, 5 units unsold. 5 units sold, 5 units unsold. So, if you want to identify how much profit I am making, you will compare your sales unit with the units which has been sold. Correct or no? So, remaining units is nothing but your unsold. So, what you do to get the profit? What did you do? You took the sales. Sir, sales is how much? 60. Sir, purchases is actually 100. But out of this 100, 50 rupees is still with me. So, how much did you actually sell? I sold only 50. So, now what is the profit? 10 rupee. Now, what is the profit? 10 rupee. Correct? Yes, this is how you calculated. You are smart students. Correct? You are brilliant students. Your company secretaries, right? You said, boss, you can't compare 100 with 60 because all 100, whatever I have purchased, I have not sold. I have sold only goods worth 50 rupees. Now I am using the word goods worth 50 rupees. Meaning what? Goods worth 50 rupees means goods costing 50 rupees. Goods costing 50 rupees. What is the meaning of goods costing 50 rupees? Goods costing 50 rupees means the goods which I bought at what price? That is my cost. Correct or no? The goods which I purchased for a price, that price is nothing but my cost. When I add margin to that and sell to my customer, it becomes my selling price. It becomes my selling price. Correct? So how much worth of goods you sold? The worth of goods I sold is only 50 rupees. Now, did you arrive at profit 10 rupees? Yes. Now, understand this exact logic is used in your trading account. ಹೌದಾ ಸರ್? ಹೆಂಗೆ ಸರ್? Buy sales. How much appa? 60. 2 purchases. How much? 100. Correct sir? But not all this purchase has been sold. ಹೌದಲ್ವಾ? ಎಲ್ಲ ಪರ್ಚೇಸ್ ಸೇಲ್ ಆಗಿಲ್ಲ ಅಲ್ವಾ? ಉಳಿದಿದೆ ನಮ್ಮ ಹತ್ರ. ಆ ಉಳಿದಿರೋದಕ್ಕೆ ಏನಂತಾರೆ? Buy closing stock. Buy closing stock 50 rupees. You are understanding? Yes. So what is this total? 110. What is this total? 100. So difference is 10 rupees. That is nothing but 2 gross profit, 10 rupees. Now your mathematical equation is exactly coming in your trading account. Sir, closing stock ಈ ಕಡೆನೇ ಯಾಕೆ ತೋರಿಸ್ಬೇಕು? ಸರ್, ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ಆ ಕಡೆನೇ ತೋರಿಸ್ಲಿಲ್ಲ ಅಂದ್ರೆ ಏನಾಗುತ್ತೆ ಅಂದ್ರೆ your profit will be wrong. If you don't show your closing stock here, suppose let's say this closing stock was not there. Okay, let's think this closing stock is not there. ಇಲ್ಲಿ ಅವಾಗ ಟೋಟಲ್ ಏನಾಗ್ತಿತ್ತು? ಟೋಟಲ್ ಅವಾಗ 60 ಆಗ್ತಿತ್ತು. ಇಲ್ಲಿ ಟೋಟಲ್ 100 ಆಗ್ತಿತ್ತು. ಅವಾಗ ಲಾಸ್ ಬಂದ್ಬಿಡ್ತಿತ್ತು. ಕರೆಕ್ಟ್ ಅವ್ರನು 100 rupees ಪರ್ಚೇಸ್ ಮಾಡಿದಿರಾ, 60 rupees ಸೇಲ್ ಮಾಡಿದಿರಾ ಅಂತ ಬಂದ್ಬಿಡ್ತಿತ್ತು. ಬಟ್ ಇಸ್ ದಟ್ ರೈಟ್? ನೋ ಸರ್. ವಾಟ್ ಐ ವಿಲ್ ಡೂ ಇಸ್ ಐ ವಿಲ್ ಡೂ ಡಿಫರೆಂಟ್ ಥಿಂಗ್ ಸರ್. ಐ ವಿಲ್ ಶೋ ಪರ್ಚೇಸಸ್ ಓನ್ಲಿ 50. I will show purchases only 50. Okay, fine. You show purchase only 50. What happened to remaining 50? Stock, sir. Stock. Okay, stock. Now, how do you record the stock? That is the next question. How do you record the stock? Now, this is where your journal entry will come into picture. Now, understand. When you purchase, what is the entry you make up? Purchase account debit 100 to bank account 100. This is the entry you made when you purchase the 10 items, right? Purchase account debit to bank account. Following? Yes, sir, following. Now, if you open your purchase account, it will be to bank 100. Now, I always asked you, all the expenses and income account will never get carry forwarded. I always told you it will get transferred to P&L. Now I will transfer this to trading account. Now I transfer to trading account. Automatically the trading account will become 100. Now how to adjust this then, sir? How to adjust this? What is the way of adjusting this? The way of adjusting is nothing but by showing this closing stock. The way to adjust is by showing this closing stock. No, sir, I don't want to follow this. This is wrong, sir. Okay, what is you want to follow? Sir, what I want to follow is purchase account to bank 100, sir. Okay, done. Good. What I will do is, sir, I will transfer this to closing stock account, sir. By closing stock 50, by trading account 50. Okay, good. So in your trading account, how much purchases will come? 50. In your trading account, how much it will come? 50. Okay, done, sir. Done. Okay. Now closing stock account debit to purchases. This is the entry you recorded. Right? Everybody recorded this entry only. Correct? Following, everyone is following? Yes? Okay, following. Now my question is simple, sir. What was earlier I recorded? 100. Here also 100. Now what I did here, I showed closing stock here. Why? Sir, because out of purchases only some stock is remaining, sir. I want to move that amount to shop. Okay, fine. You moved it here, huh? Correct? I am moving it here. Ashte. Instead of moving it in the purchases account, I am moving it in the trading account. One at the same, no. In purchase account, you move closing to closing stock, or you transfer the entire purchases to trading account, and from trading account, you move some amount to closing stock. One at the same. You are getting the logic, everybody. So, in purchase account only, you can transfer it to closing stock, or you can transfer it to closing stock in trading account. Ashte. Understanding, everybody? Yes, I hope you are getting. Yes. Now, if your credit side is high, it will become gross profit. Your credit side is lower than your debit side, it will become gross loss. Sir, when gross loss will happen? Sir, I purchased at 10 rupees, right? I am able to sell 5 units at only 8 rupees. How much you sold at? 40. What is the cost of this? Sir, the cost is 10. Are you making 2 rupees loss? Right? 2 rupees loss is there or not? How many units you sold? 5 units sold. How many units should remain in closing stock? 5 units. What is the cost? 10. So 50. So your closing stocks will still come as 50, but your sales will come as 40. Your purchases will, sorry, yeah. Your purchases will be 100 only. Your sales will become 40. Your closing stock will still show at 90. The total is coming to 90, and your gross purchase on the right side is coming to 100. 100 minus 90 is 10 rupees, which will come on this side, is called as gross loss. It's called as gross loss. I hope you are understanding the logic behind why closing stock is shown on the credit side. If you don't want to show it in the trading account, then you need to show it in the purchase account. Sir, I don't want to show it in the purchase account, then you show it in the trading account. Is everybody understanding? If you are having any doubts, please raise your questions. If you are not having any doubts, please say, I am good, sir, we can go ahead. Yeah. Online students, try to be interactive as well. It will be helpful for me to understand whether you guys are getting it or no. Just thumbs up or yes would be enough. Hope the concept is clear. Sir, what about rest of the items? I'll come, sir. Each item will go, will understand. Each item will dig in and will understand. Now, till now, is it clear is the question. Okay. I think only one student is active. So the student is telling we can go ahead, sir. Okay, good, fine. Now, sir, you showed us trading account like this. I understood the concept of sales. I understood the concept of closing stock. I understood the concept of purchases. Now tell me the concept of opening stock. Closing stock ಹೇಳ್ಬಿಟ್ರಿ sir, ಅರ್ಥ ಆಯ್ತು sir. ಈಗ opening stock ಬಗ್ಗೆ ಹೇಳ್ಕೊಡಿ sir. Coming there. Sir, what about direct expense and direct income? That will take in the next step. Okay, now coming to opening stock. Now I will give you one more question. The question is like this. You purchase 10 units at 10 rupees. Okay, now you sold out of this 10, you sold 6 units at 15 rupees. That is 90 rupees. What is remaining, appa? 4 units, sir. What is the cost of those? 10, sir. 40. Sir, why you are showing only 40, sir? Why we cannot multiply 10 with 15? Because we are able to sell at 15, no? Question is understanding. Everybody is understanding the question. Sir, I purchased 10 units for 10 rupees 100. Out of this, you are going to sell 6 units. For 15, you make 90. Okay. Remaining is 4 units. That 4 units also I can measure at 15 rupees only. No, sir. You can't measure that at 15 rupees. I will tell you why. But before that, always remember this point. What is the point? Stock will be always valued at cost or NRV, whichever is lower. Please note down this point in your book. Please. Stock will be always valued at cost or NRV, whichever is lower. WEL meaning whichever is lower. While you write in your notes, please write it very clearly as whichever is lower. Don't write WEL, because I will remember. You will open the book after 10 days and you will forget it. Yes, so please write it down. Okay, coming back. Now, this closing stock, will account it in the trading account or no? Yes, sir. Buy sales 90, two purchases 100, buy closing stock 40. Now go by the rule. What is the rule? Always value it at cost. Don't take the selling price. I will give example why it should not be taken. But as of now, you remember the rule. Okay, everybody? Yeah. What is the total? 130. Here it is 100. So the difference 30 rupees is nothing but my gross profit. Sir, how did you get this 30, sir? Can you justify it? Yes, I can justify it. How many units you purchased? 10 units, sir. Out of this, how many is sold? 6 rupees, sir. What is the purchase price of this, sir? 10 rupees, sir. What is the selling price of this, sir? 15 rupees, sir. What is the difference in selling price and cost price? 5 rupees, sir. So that means on each unit you are making a profit of 5 rupees? Yes, sir. So how many units you sold? 6 units, sir. So 6 into 5 is equal to 30. This is my profit. This is how you solve using mathematics, and this is how you solve using accounts. So if anybody thinks that accounting is something which doesn't require mathematics, sorry to say, accounting is also evolution of mathematics. It is the way it has been presented differently than how it is presented in the mathematics. Just like how you get trauma when I start writing this, in the same way, the investor will also start feeling trauma. That is why, to avoid that trauma, they create a simpler way to present the things and make people understand. Am I clear, everyone? Yes? Okay, sir, done. Now, what is so special you are making to write the same thing, sir? In last question also, you did the same thing. Yes, yes, I know. Now, we'll come to the next concept. What is the next concept, sir? The next concept is, suppose this is our first year. This is our first year of business. Now, we'll go to second year of business. Now, in second year of business, what happened was, I sold 3 more units at 15. I made no purchases. Purchases is equal to 0. Sir, then from where you are selling it, sir? From where are you selling it? I had last year closing stock, no? How much units? I had 4 units left with me. 4 units left with me, correct or no? From these 4 units, I am selling it. From these 4 units, I am going to sell it. Okay, va? Everybody clear? All good? Okay. Out of that 4 units, I sold 3 units. So what is purchases? 0. Sir, that means, is everything profit? What is the sales you have done? 3 into 15 is equal to 45. So, does that mean this entire 45 is my profit? No, sir. How did you sell these 3 units? Sir, these 3 units I sold because I already had 3 units earlier. Correct. How much did you purchase those units for? Sir, I purchased those units for 10 rupees each. So, how much profit you actually made? Sir, I made a profit of 15 rupees. How did you come at this 15 rupees, sir? Simple. Each unit I made a profit of 3 rupees. I sold 3 units. So 3 into 15 will be 15. Sorry, 3 into 5 will be 15. Yes or no? This is your mathematical equation. Am I right? This is your mathematical equation. Now let's see how this equation will get fit into the trading account. How much is the sales, appa? Sir, sales is 45 rupees, sir. Okay. How much is the purchases, sir? Sir, no purchases, sir. 0. Does that mean you made a profit of 45? No, no, sir. I had stock now with me. I had stock. Oh, you had stock. Okay. So, you had stock. Is that closing stock? No, no, sir. It was closing stock of last year. Your closing stock of last year will become my opening stock of current year. Correct or no? Sir, what you are saying, sir? Closing stock of last year is becoming opening stock of. You are confusing, sir. Sir, this is the quantity of water. I finished this much. This much is remaining. I completed the class. I went to home. Tomorrow morning, I came back. Will this water become full or will it get reduced or will it remain as it is? Sir, it will remain as it is. It will neither get reduced, it will neither get increased. It will remain whatever you have left it at. Correct or no? What happened? Sir, whatever you left yesterday is becoming the same thing for today. The same quantity remains for today. So that means, what was the water quantity during the yesterday's closing hours is becoming my water quantity during my opening hours in the current day. When I open my classroom, this is the quantity of water I am having. Yesterday while closing, this was the quantity. While opening the classroom, this is the quantity. So yesterday's closing quantity of water is becoming my opening quantity of water in the current year. Current class. In the same way, last year's closing stock will become current year's opening stock. Correct or no? So from that opening stock only you are making sales. Now suppose let's assume like this. Sir, what if opening stock was not there? You would have not sold it. No, sir, I am still making sales, sir. There is no opening stock, sir. That means you have to purchase it. If you would have purchased it, where the entry would have come? Here, sir. If you are purchasing, the entry would have added come here. On the debit side only, no? If you have made the purchases, it would have come on the debit side. But you are not making any purchases. Why I am not making any purchases, sir? Because I already have a opening stock. So, technically speaking, if purchase was made, it would have come on the debit side. If purchases are not there and I am using the quantity from opening stock, then that opening stock should also come where? On the debit side. Correct or no? Sir, no, sir, I don't have opening stock. I purchased. It would have come here. No, sir, I am not purchasing. I had opening stock. It will come here. So, whatever it is, it will come on the debit side. Sir, debit side you told only expenses, sir. How stock is an expense, sir? You have already purchased the stock last year. Correct or no? Last year it was an expenses. That expenses only certain portion you carried to the current year. Last year, your expenses was 100. But did you entirely transfer the expenses in trading account? No, sir. Out of this 100 rupees expenses, I took out some expenses. Why did you take out? Because this is not expense of the current year, sir. Why this is not expense of current year? Matching concept. Sir, what is matching concept now, sir? Every revenue will have its expenses. How much revenue was there, sir? Revenue was 90. How did you come at 90? Sir, 6 units sold. So, you will match this 6 units revenue with 6 units cost. Correct or no? So, 100 minus 40 is nothing but 60. Sir, what is this 60? 6 into 10. 6 units cost. So, based on matching concept, what is the revenue? According to that, I will have expenses. So, 100 was my total expenses, but in that, what was relating to this year? Only 60. So, that is why I showed 40 that side. Net effect, I am getting 60 rupees as an expenses. Am I right? Yes? Now, that is what is coming in the current year, sir. Last year it was not expenses. This year it will become my expenses. Why? Because this year you are selling those goods. Correct or no? This year you are selling those goods. So this year it will become my expenses, sir, 40 rupees. So that is why what I do is, sir, this year I will show it on the debit side. To opening stock 40. If there was no opening stock, I would have shown it under purchases. But there is opening stock and there is no purchases. And this opening stock will come on the debit side. Why? Because last year already expense done. What will come on the debit side? All the expenses. What will come on the credit side? All the income. Correct or no? So opening stock is there, because of which purchases is not coming. Right? Yes, everybody is following. Yes, is it clear? Okay. Now, sir, my next question to you. How many units you had, sir, as opening stock? 4 units, sir. How many you sold, sir? 3 units, sir. How many you sold? 3 units. So does that mean one more unit is still remaining with you? Yes, sir. One more unit is still remaining. Is it called as closing stock? Yes, sir. 1 unit into 10 rupees. Sir, 40 rupees you bought is the opening stock, saying that, sir, it is expenses. Last year only expense was done. But the problem was, matching concept was not allowing me to pass it as expenses in 1 year. Why matching concept was not allowing? Because not entire cost revenue was generated. Only to some portion revenue was generated. For remaining portion, revenue was not yet generated. So that is what it said. No. Matching concept is saying not allowed. You carry forward the expenses. Okay, sir, done. I carry forward the expenses. Now again matching concept will say, come and say, boss, you carry forwarded 40 rupees, correct? How much did you make the sales out of it? Sir, 45 rupees. Did you sell the entire quantities? No. How much you sold? Only 3 quantities. Then park the expenses of only 3 quantities. One more quantity cost is not at your expenses. Why? Because revenue is not there. Revenue illa inno. When revenue is not there, then how you can recognize the expenses? Correct. Everybody is understanding. Yes. So what happens? Matching concept says, do one thing. This 10 rupees extra which is still with you as a closing stock, it will go forward for the next year. So it goes on and on and on till you actually sell it. Clear? Everybody? Yes? Okay. Now coming back to the question, coming back to the topic of this one. Right? That time I asked you to hold on to the point. Now I will tell you why I asked you to hold on to the point. Now, let us say we valued this 40 rupees at the selling price. What it would have become? 4 into 15? 60. So it would have become 60. Okay, I'll write it freshly so that you understand. Buy sales 60. To purchases 100. Buy closing stock. How many units were left? 4 units, but I am valuing it at 15. So that will be 60. Total 120, 100. So the remaining will be 20 rupees your gross profit. Remaining 20 rupees is your gross profit. Is everybody following? Yes. Last time, how much was the profit? Oh, did I make a mistake? Oh, sorry. Yeah. This is 90. My pardon. This is 90. 6 units at 15 rupees each. 6 units at 15 rupees each. This is 4 units at 15 rupees each. So total becomes 150. Here also it should be 150. Difference in gross profit is 50. Okay, cool. Very good. Excellent. Yes, sir. I'm good, sir. I know that, sir. Tell me, sir. What next? Okay, what next? Next is this, sir. Next year. Next year. Sir, this closing stock will become opening stock, sir? Yes, sir. So this will become my opening stock? Yes, sir. 60. 2 purchases? 0, sir. 0. Okay, good. 0. Buy sales, how much? Buy sales, I sold 3 units at 15, sir. Okay, very good. 45. Okay, 45. Buy closing stock, how much, sir? You valued at selling price, no? 15. Yes, sir. 60. 60. No profit, no loss. Wow. No profit, no loss. In the second year, no profit, no loss. Sir, yes, you only did, no? You valued at 15 rupees. No profit, no loss. Exactly matching. Sir, what happens next year? Next year also same appa. 2 opening stock, 15. Suppose we sold it. Buy sales, 15. Close. No closing stock, nothing. Business band. 2 gross profit, 0. No profit, no loss. What happened exactly here? What happened exactly here is you recognize the entire gross profit here only. You recognize the entire gross profit here itself, which is wrong. Which is wrong. Understand how many units we purchased? 10 units. At what? 10 rupees. Correct? Huh? How many units? 10 units you plan to sell in next 3 years. Each unit at 15. Ultimately, per unit, what is the profit? 5 rupees, sir. So, how much maximum profit you can make? Sir, 5 rupees into 10 units, sir. Correct? Huh? Yes, sir. Total 50 units. 50 rupees. 5 rupees on each unit is the profit, sir. Total 10 units. So, total will be 50 rupees, sir. Okay, very good. Total is 50 rupees. So, profit itself is totally 50 rupees. What you did? You recognize the entire profit in 1 year. Is it correct? Matching concept says what? Recognize revenue and its associated expenses. Okay, sir. I recognized revenue of 45 rupees. Yes, sir. Associated expense was how much? Sir, associated expense was 3 units into 10 rupee. You cannot say 3 into 15. Why? Because associated expense is actually only 10. Matching concept says revenue should be matched with associated expenses. How much was associated expenses? Only 10 rupees. So you should have recognized only 10 rupees. If you don't recognize at 10 rupees, then there will be no profit in the further years. Why? Because all the profit is captured in year 1 itself, which is wrong as per matching concept, which is totally wrong. That is why they brought out this rule. What happened is companies used to do this earlier to show more profit in year 1. And sir, what happened with second year, sir? There will be no profit only, no, sir. No. This closing stock and opening stock is a continuous thing. No, every year it happens. So every year they used to boost the profit. But in reality, that much profit was not there. Clear? So to end this illogical way of valuing the closing stock, they bought this rule. This rule, I don't even say it is as a rule, it is a principle. Logical principle, correct or no? We understood why this rule has been done. There is a logic behind this. What is the logic? If you don't recognize the closing stock at cost, then entire profit gets recognized in 1 year only, which is wrong. Profit should be recognized every year as and when you sell it. Correct? Yes. So the rule was made so that all the closing stock should be valued at cost only. Sir, what is the second part? NRV, whichever is lower. The second part you explain me, sir. I'll explain it to you with one example. Everybody remembers COVID, my classic example. During COVID, there was shortage of masks. So what happened? One of my client bought 10,000 units of mask. How many? 10,000 units of mask for 5 rupees each. For 5 rupees each. Okay, ma? Yes, sir. Okay, sir. Done. What happened? He bought this mask on 31st March. No, let's not take March. 30th June 2022. Where did that go? 30th June 2022. Now, if you remember correctly, maybe if I also remember correctly, 2020 we got first wave. Correct? 2022, 2022, 1 I guess. Yeah, sorry. 2021 we got almost second wave. Right? Yes, let's make this also. In the more dangerous was in the second wave, if you remember correctly. What was it? Black fungus. This was one extra thing which happened. Then the next extra thing which happened was TikTok. Correct or no? Yes? Correct. So, assuming the second wave will continue, my client invested the money. What happened? Suddenly from July, August, the COVID started to drop. The patients started to drop. Suddenly masks also started to come off. Now what happened was, out of this 10,000 units, in 2-3 months he could sell, say for example, 8,000 units. By December he has left with 2,000 units. At what price he purchased? 5 rupees. By December, people stopped wearing mask. Completely. By December, people stopped wearing mask. Now, I am not definitely following the historical timelines. I'm just giving you an example to understand. I may be wrong also timelines, but just giving an example. So by December 2021, people stopped wearing mask. Now, this 2,000 units of mask which was left with my client for purchased at 5 rupees each, he was unable to sell anything. Why? People are not buying it. Correct? So what he did is, he tried to sell this 2,000 masks at a discount price of 2 rupees. Now tell me, what is the cost? Cost is 5, sir. But how much you will be able to realize from it? I can realize only 2 rupees, sir. Realization is not a new word. We have already discussed. How much realization is nothing but how much you will ultimately end while getting up while selling the goods. So ultimately, how much you will end up with? That means how much you will fetch at the end of the day. I will fetch only 2 rupees. You are showing at 5 rupees. Now tell me, you are telling that this mask is worth 5 rupees. At the same time, you yourself is telling that this mask can be sold at only 2 rupees. Conflicting or not? Yes. For example, it is as good as at night, you keep an alarm at morning 6 o'clock saying, I will sleep now and get up early in the 6 o'clock and start studying. Okay? Yes, full josh. Then you keep the phone, you sleep. Suddenly vibration phone. One vibration, one message comes. Open, see the message. And after some time you see the time, it is already 2 o'clock in the midnight. What happened? You are contradicting yourself. First, you yourself kept the alarm at 6 o'clock. Then what did you say? I will wake up. Then what did you do? Started to use the phone. Are you contradicting yourself? Right? In the same way, you are telling that the cost of this mask is 5 rupees. But how much are you able to sell it for? 2 rupees. Correct? Now tell me, what is the actual worth of this mask? Is the mask worth 5 rupees or the mask worth 2 rupees? Only 2 rupees. Correct or no? So that is why what your rule says is value at cost or NRV, whichever is lower. Which is lower? 2 rupees. So you value your closing stock at 2 rupees. Why 2 rupees I need to value, sir? Because that is the amount which you can get out of that. Understanding, everybody? If I value at 5 rupees, then you should be able to get 5 rupees out of it. If you see our examples in all these cases which we discussed, we always got more than what our cost was. Correct or no? Our cost was 10 rupees. We sold it at 12 or we sold it at 15. Correct? But in this case, our cost is 5 rupees, but we are able to sell it at only 2 rupees. So either value at the price which is actually going to be fetched. Sir, last case ಅಲ್ಲಿ ನಾವು ಯಾಕೆ ಹಂಗೆ ಮಾಡಲಿಲ್ಲ? ಲಾಸ್ಟ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ how much value you are going to fetch? More than the cost? Yes. If you are going to fetch more than the cost, then it says value it at only cost. Sir, why I should not value it at market value? I already explained. If you value it at market value, then your entire profit will come and sit in 1 year only. Understanding, everybody? Yes. In this case, if your realizable value itself is only 2 rupees, then what is the use of valuing it at 5 rupees? Nim worth 2 ರೂಪಾಯಿ. ಆದ್ರೆ ನಾನು 5 ಕೋಟಿ ರೂಪಾಯಿ ಅನ್ನೋದ್ರ ಅರ್ಥ ಇರುತ್ತಾ? ಇಲ್ಲ ತಾನೆ, ಹಂಗೆ. So what is the value which you are going to realize? Only that much you recognize. So that is why it says cost or NRV, whichever is lower. So which is lower? NRV. So I'll recognize it at NRV. Sir, if I recognize it at NRV, will there not be loss? There will be not loss. Why? Because you recognized your closing stock at 2 rupees. Next time you make sales at 2 rupees. Is there any loss? Zero. Yes, sir. Then what is this loss, sir? What will happen to this 3 rupees loss? This 3 rupees loss, I will recognize it immediately. When you will recognize immediately, sir? When I am recognizing immediately is when I try to value my closing stock at cost or NRV, whichever is lower. Correct? Yes, sir. So 5 rupees is the cost, 2 rupees is the value. So how much is the NRV? 2 rupees. So what is the valuation principle? 2 rupees is the closing stock valuation principle. So this 3 rupees loss, what will happen, sir? I will write it off immediately. Sir, cheating, sir. You are doing cheating. When profit was not recognized in 1 year, you said profit should never be recognized in year 1 only. You should recognize it as and when it is actually earned. Correct. But here you are saying loss should be recognized in 1 year only. Why cheating, sir? Cheating. Why cheating? Because two concepts, if you remember correctly. What are those two concepts? One, matching concept. That is the matching concepts explains you why profit should not be recognized in 1 year only. Now, which is the concept which will say loss should be recognized immediately? Anybody remembers? Which is the concept that says loss should be recognized immediately? If you remember correctly my first few classes, you should be able to tell which is that concept which tells recognize the loss immediately. Excellent. One student is telling prudence, sir. Prudence. Very good. Prudence is the concept which says recognize the losses immediately. Don't anticipate and recognize any income. What prudence says? Anticipate and recognize any losses immediately, but don't anticipate any income. So my loss is already anticipated, so I will recognize it immediately following prudence. Clear, everybody? Yes. But I can't recognize the entire income in 1 year. One is because of prudence, because it restricts us only for loss. Second is matching concept. Am I clear? So what are the things we understood till now? Sales, purchases, opening stock, closing stock. Right? Yes. So this is done. This is done. This is done. Now we will come to this. Sir, now tell me what is direct expenses and direct income? Sir, please explain us what do you mean by direct expenses or direct income. The word itself says, I mean, the name itself has a word called as direct. Sir, what is the meaning of this direct? Can anyone tell me how we can interpret this? Sir, direct, the word itself is telling direct. Sir, direct to what, sir? Direct to what? This word is trying to connect your expenses with your sales. Direct is the word which is trying to connect your expenses with sales. That means what, sir? That means in simple words, if your sales goes up, this particular expense will also go up. If your sales come down, this expense will also come down. It is having direct impact on your sales, or it may have direct impact on your purchases. That is why they use the word direct. Sir, give me examples, please. For God's sake, I am not understanding, sir. Fine. I will give you example. Suppose, let's start like this. You are running the restaurant. You are running the restaurant. Yes, sir. I am running the restaurant, sir. I have a restaurant business. Yes, very good. You are having restaurant business. Yes, sir. I have restaurant business. Now, my question to you: in restaurant business, what are the primary expenses? Sir, grocery. Okay, very good. Grocery. Sir, chef salary. Okay, very good. Chef salary. Yes, agree. Sir, gas. Yes, correct. Gas. Sir, rent, sir. Yes, rent. Sir, salary of staff, sir. Yes, sir, salary of staff. Yes, all these are expenses. Okay. Now, my question to you is, this grocery will anyhow come under purchases. Correct, sir. It will come under purchases. Now, my question to you is, without chef, can you run the restaurant? Without chef, can you run the restaurant? Answer is no. Sir, I can run, sir. How? I will only become chef, sir. Correct? Huh? Still, chef is needed. No, you are just taking the hat of the chef. Doesn't mean that without chef you cannot. You can still run the business. No. Chef is important. Without chef, you cannot run the business. In case of restaurant. Correct? Now tell me, without chef's salary, can you sell anything? Without this salary, can you sell anything? Answer is no. Without chef's salary, can you sell anything? Answer is no. Suppose, for example, sir, ನಾಳೆ ಬೆಳಗ್ಗೆ 6 ಗಂಟೆಗೆ ಹೋಟ್ಲ್ ಓಪನ್ ಮಾಡಿ ಎಲ್ಲ ಹಿಟ್ ರುಬ್ಬಿ ರೆಡಿ ಮಾಡಿ ಇಟ್ಟಿದ್ದೀನಿ ಸರ್. ಶೆಫ್ ಫೋನ್ ಸ್ವಿಚ್ ಆಫ್, ಗಾಯಬ್, ಸುದ್ದಿ ಇಲ್ಲ. ರೂಮಿಗೆ ಹೋಗಿ ನೋಡ್ತೀನಿ, ಅಲ್ಲೂ ಇಲ್ಲ. ಎಲ್ಲಿ ಹೋಗಿದ್ದಾನೆ ಗೊತ್ತಿಲ್ಲ. ಮತ್ತೆ ಏನ್ ಮಾಡ್ತೀಯಾ? ಇನ್ನೇನ್ ಮಾಡ್ಬೇಕು ಸರ್? ಹೋಟ್ಲ್ ಬಂದ್ ಮಾಡ್ಬೇಕು. ಕರೆಕ್ಟ್ ಆರ್ ನೋ? ಇಫ್ ಶೆಫ್ ಇಸ್ ನಾಟ್ ದೇರ್, ಶಟ್ ಡೌನ್ ದ ಹೋಟ್ಲ್ or bring another chef. But chef is needed. Iva illa andre innobnu barlebeku. So my question to you, in a restaurant business, can you sell anything without a chef? Answer is no. So is it not directly relating or directly affecting your sales? Is it not directly affecting sales? Right? Directly affecting the sales. Right? So which items which are directly affecting the sales are classified under direct expenses or direct income. In this case, it is direct expenses. Direct expenses, which is directly proportional to our sales or purchases. Clear? Is everybody understanding? Yes. Am I clear? Oh, next. Sir, gas, sir. Gas bill. It is also same, sir. It is a direct expenses. Why, sir? Without gas, ಎಲ್ಲಿಂದ ಕುಕ್ ಮಾಡ್ತೀರಾ ಸರ್? ನನ್ನ ಹತ್ರ ಮ್ಯಾಜಿಕ್ ಇದೆ ಸರ್, ಓಂ ಬಾಮ್ ಓಂ ಬುಸ್. ಆಗಲ್ಲ ಸರ್, ಇಟ್ ವಿಲ್ ನಾಟ್ ವರ್ಕ್. ಕರೆಕ್ಟ್? ಯು ನೀಡ್ ಗ್ಯಾಸ್ ಆರ್ ಯು ನೀಡ್ ವುಡ್. It can be gas cooked or it can be wood cooked. Wood is also required, no? Sir, gas ಬೇಕಾಗಿಲ್ಲ ಸರ್, ಕಟ್ಟಿಗೆ ತರ್ತೀನಿ. ಕಟ್ಟಿಗೆನೂ ಅವಾಗ ಡೈರೆಕ್ಟ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್. Without that you cannot cook. Correct or no? Yes or no? No, no sir, mine is all pre-packed food, I will warm it. Fine sir, for warming what you need? Water sir. How do you boil it sir? Using gas. Done. Understanding everybody? Yes? Now coming to rent. Rent is a concept in restaurant which is very peculiar. Some say it can be direct expenses, some argue it can be indirect expenses. Sir, tell me sir, explain us properly. Now my question to you, without rent, can you run the business? Can you run the restaurant business? Yes? No? Tell me. Without rent, can you run the, in simple terms, rent is paid for what sir? Rent is paid for building sir. Now my question to you, without paying this rent also, can you still make the sales? Answer is yes. Sir, yes. What if your property is owned by you? Correct? Howd sir, howd. What if I delay the rent by 3 months? Does that mean I have to shut down the restaurant from today? No. I can still run my restaurant. COVID, if you remember, government was asked to all the landowners or property owners or landlords to waive off 2 months rent. Correct? To waive off 2 months rent. Correct? So in such situation only, observe, 2 months there is no rent appa. So will your sales stop? Will your sales stop? No sir, it will not stop. Now suddenly from rent 1 lakh rupees it went to 3 lakh rupees. Will your sales increase? No sir, it will not increase. You are understanding? Rent has no connection with your sales. ಸರ್, ನಾಳೆ ಪ್ರಾಪರ್ಟಿ ಓನರ್ ಬಂದು ಒದ್ದು ಹೊರಗೆ ಹಾಕ್ದ, ಅವಾಗ ಏನ್ ಮಾಡ್ತೀರಾ ಸರ್? ಅವಾಗ ಡೈರೆಕ್ಟ್ ಕನೆಕ್ಷನ್ ಇದೆ ಅಲ್ವಾ ಸರ್? ಡೈರೆಕ್ಟ್ ಕನೆಕ್ಷನ್ ಇಲ್ಲಪ್ಪ. ನೀನು ಹೋಗಿ ನಿನ್ ಮನೆಯಲ್ಲಿ ಕ್ಲೌಡ್ ಕಿಚನ್ ಮಾಡಿ ಅಡಿಗೆ ಮಾಡಿ ಕಳಿಸು ಥ್ರೂ ಝೊಮ್ಯಾಟೊ, ಸ್ವಿಗ್ಗಿ. ಬೇಡ, ರೋಡಿಗೆ ಬಾ, ಫುಟ್ಪಾತ್ ಮೇಲೆ ಸ್ಟಾಲ್ ಹಾಕೋ, ಅಂಗಡಿ ಹಾಕೋ. ನೋ ರೆಂಟ್, ನೋ. ಸೊ ರೆಂಟ್ directly is not proportional to your sales. That is why rent is called as indirect expenses. What expenses? Indirect expenses. Indirect expenses. That means the expenses is not having any impact on my sales or on my purchases. Clear everybody? Yes? Okay. Now next example. Staff salary sir. Sir, servers are there in your hotel, cleaning people are there. Yes? What about that salary sir? Will that become direct expenses or will that become indirect expenses? Anybody? Will that become direct expenses or will that become indirect expenses? Staff salary, will it become direct expenses or will it become indirect expenses? Sir, understand one thing. Staff salary, especially your servers and your waiters, their expenses will be classified under indirect expenses. Sir, why is that, sir? Why is that? Why is that? I will tell you why it is. If there are no servers, can you still open your restaurant? Answer is yes or no. No? Yes, sir, I can open. How, sir? I will do self-service. You take the bill, you come to the counter, take the food, go eat. I will only become server, sir. One or the other way you can have. But will it have any impact on sales? No. I can still manage and still sell. Correct? So such server's expense salary or waiter salary will become indirect expenses. Sir, cleaning staff, sir, cleaning staff. Cleaning staff can become direct expenses. Sir, how is it impacting, sir? Sir, on ತಟ್ಟೆ ತೊಳೆದು ಕೊಡ್ಲಿಲ್ಲ ಅಂದ್ರೆ ನಿಮಗೆ ಊಟ ಹಾಕಕ್ಕೆ ಇಲ್ಲ ಅಲ್ಲಿ ಅವಾಗ ಹೆಂಗ್ ಸೇಲ್ ಮಾಡ್ತೀರಾ? Understanding? Okay, sir. Understood the concept of direct expenses. Now tell me the concept of direct income. Sir, direct income is nothing but the income which is again directly related to your purchases or your sales. In my way, direct income is directly related to your purchases. Sir, what do you mean by that, sir? When you purchase grocery for 100 kg, you get the price at 100 rupees. If you purchase the grocery for 500, you will get it at 90 rupees. What is the difference? Discount, sir. That discount is nothing but direct income. The discount which you receive on the purchases is nothing but direct income. Sir, why it is direct income? Because it is directly relating to your purchases. If you don't purchase, no discount. If you don't purchase, no discount. If you don't purchase, no sales also. Purchase ಮಾಡಿಲ್ಲ ಅಂದ್ರೆ ಎಲ್ಲಿಂದ ಸೇಲ್ ಮಾಡ್ತೀರಾ? Interrelated. Understanding? In the same way, in direct expenses, your discount allowed will also come. When you sell and you give the discount, it will come under direct expenses. Sir, how it will come under direct expenses? Sir? If you don't sell, you will not give any discount. If you sell, you will give the discount. Directly related. In the same way, purchases and discount received is also directly related. I hope you are understanding what I am trying to tell. Yes? So, I hope all the concepts are clear. This is done now. This is also done. This is already explained. So, this is how your trading account will look like. Any doubts in this? Anybody is having a doubt? Okay. Okay, sir. Done. Trading account understood, sir. What next, sir? What next, huh? The next is this, sir. Trading account. Correct, sir? Buy, sales, buy, closing stock, 2, opening stock, 2, purchases, 2, direct expenses, Okay, sir, all done, sir. We got gross profit or gross loss. What next, sir? What next is below this only the account will continue, and the account which continues is called as profit and loss account. What account? Profit and loss account. Okay, everybody following? Yes, sir, following, sir. What will happen here, sir? Your gross loss, which is on the credit side, will come here to gross loss brought down. You remember your closing accounts, asset account or liability account? If you remember your asset account, to balance brought down by some, say for example XYZ 100, here 10, to say here 1000, here 100. Now when you close the books, by balance carried down 900. If you remember this, then in the next year, what we told, it will come on the opposite side. To balance brought down 900. You remember this? When you close the account, in the next year, it will come on the opposite side. I gave you reason also. It will always have a debit balance. So start with debit. In the same way, your gross loss will come this side. Okay, sir. Then what next, sir? Your gross profit will come this side. Okay, sir. Done. Understood, sir. What next, sir? Sir, what are the expenses that got captured here? What are the expenses that got captured? Sir, opening stock is captured, sir. Sales is captured, sir. Direct income, direct expenses, purchase, closing stock. Now, what are the expenses or income which might be remaining? Can you tell me? We captured opening stock, sales, purchases, closing stock, gross profit, gross loss. We captured direct expenses. We captured direct income. So, what is left? What is left is indirect expenses and indirect income. So, in other words, your profit and loss account will capture your indirect expenses and indirect income. Clear? Everybody is following? Sir, what are all the indirect expenses? Expenses which are not directly affecting or impacting our sales or purchases. Sir, what is indirect income? Same thing, sir, which are not directly affecting sales or purchases. Sir, can you give example, sir? Just gave in the previous question. What is that? Rent, electricity bill, then server salary or waiter salary. What else, sir? What else you can give? Anything you can give. Be creative. Try to understand what else. Server salary, waiter salary, rent. You are a restaurant owner now. What all expense might come? Sir, outside cleaning charges. Okay. Cleaning charges outside. Sir, security guard. Yes. Security guard salary. Sir, any transportation to the staff. Transportation to staff. Yes. I am using the word transportation to staff. Why I am using this word? Sir, transportation on the goods will come under direct expenses. Transportation of goods will come under direct expenses. Why, sir? Why it will come direct expenses, sir? Rule is simple, sir. If you don't purchase, no transportation. And if you don't purchase, no transportation. And no transportation, no sales. Any expenses which is having direct correlation with purchases or sales will have a which will be called as direct expenses. In case of transportation to staff, if you don't give transportation to staff, will they not be able to come to your restaurant? They will be able to come to the restaurant. Understanding? So all these are example of your indirect expenses. No, outstanding expenses is not something which will come in P&L. I will explain you what is outstanding expenses. One student is telling outstanding expenses, but outstanding expenses is not a expense item. It is a liability item. Okay, we'll explain that later. No worries. Indirect income. What is indirect income? Your saving bank interest, FD interest. Somebody came and told me, sir, I will put this banner in front of your hotel. Can I put it, sir? I said, why you will put it? Sir, I will pay you 500 rupees every day. I said, okay, put it. Correct or no? Sir, my question, why it is indirect income, sir? Sir, depending upon banner, your sale happens, no, sir. Depending on that banner, your purchase happens, no. Then why it will be? It will come under indirect income. Understanding, everybody? Yes. So your profit and loss will capture indirect expenses and indirect income. Next, all these expenses put together, you will again get total and if your credit side is if your credit side is higher than the debit side, it will result in net profit. If your debit side is higher than the credit side, it will result in loss. So in short, your trading account gives you gross profit or loss. Your P&L account will give you net profit or loss. Sir, what is gross profit? What is net profit, sir? Why the word is different? Why just we can call it as loss profit? Sir, gross profit is the word used to calculate the profit from trading activities. That means gross profit is nothing but the margins on sales, direct margin which you are going to earn. That is called as gross profit, sir. That means the profit which is directly arrived from selling. Now, what is net profit, sir? It is also same, no, sir? No, sir. Net profit is arrived after deducting all other expenses also, which doesn't have any direct proportion to the sales. Am I clear? Gross profit will directly capture your margin on the sales. Sir, how it is calculating margin based upon sales, sir? Simple, sir. What are all we are capturing in trading account, sir? Sales, purchase, opening stock, closing stock, direct expense, direct income. Everything is related to sales, sir. Correct or no? Everything is related to sales. So it is directly capturing the margins from there. Margin on the sale. Whereas if you come down to P&L, all the expenses which are not related to sales are also being captured. But see, which are not required for sales, but which are necessary for the business. Now don't tell, sir, why then we have to do indirect expenses, sir? Let's not do indirect expenses. Not possible. Indirect expenses is also necessary for the business, but it is not having any correlation with the sales directly. That is the distinction between direct and indirect. It doesn't mean that indirect expense are something which can be unnecessary. No. It is also necessary for the business to run. Only thing is, it is not directly driving your sales. That's it. Or your purchases. Clear? Both expenses are necessary. Direct expense are which is having correlation with your sales and purchases. Indirect is something which is having no correlation with that. Both expenses are necessary. From your gross profit, if you reduce all your indirect expense and indirect income, what arrives is nothing but your final profit or final loss. That is the overall profit or loss of the business. Overall profit or loss from the business. This is profit or loss from your trading activities or selling activities. This is profit or loss from your overall business. Am I clear? Everybody? Any doubts on this? If you want to note it down, you can note it down, or if you want to take a screenshot, you can take a screenshot. Of course, it is given in the book as well, but just for your better understanding, if you want to. Okay? Yes? Okay. So, in your textbook, we covered this, we covered this. This is done, this is done. What is remaining? Okay? Yes? Okay. Now we will understand that word financial performance. Sir, why that word financial performance is linked with this? I told you just one sentence back. What did I tell you? Your trading account plus P&L account will give what is the ultimate profit earned by your business or ultimate loss suffered by your business. Now answer my question. Without this profit or loss, will you able to determine how the company is performing? In other words, if there was no, in our education system, if there was no exams at all, will we be able to judge the students as to how good they are? Answer is no. I mean, there are other ways also to judge. Examination is not only the condition, but I'm just asking. Okay, now don't suddenly come for protesting against me. I'm just asking. If there was no marks card, no examination at all, will you be able to judge a student's performance? Answer is no. In the same way, without the profit and without the loss, will you be able to judge the performance of the business? No. That is why we use the word financial performance can be done based upon profit and loss, because profit and loss will give us net profit or net loss, which can be used to judge the performance of a business. Clear? Everybody is understanding? Okay. Now, one more point you remember. Your trading account or your P&L account will capture the data of entire year. Correct or no? Sales includes entire sales for 12 months. Purchase includes entire purchase for 12 months. Direct expense is for 12 months. Direct income is for 12 months. So, throughout the year, whatever has happened with respect to purchase, sales, opening stock, closing stock, direct expense, direct income, all those things will be captured. Of course, in opening stock and closing stock, there is no movement. The movement happens only on the last day. Correct or no? Opening stock is coming from last year figure. Closing stock will be set at the end of the year. But rest everything, sales, purchase, your direct expenses, direct income, indirect expense, indirect income. All these things are for entire year. Remember this sentence, very, very important. I will use the sentence after some time, not today, in tomorrow's class or maybe. Clear? Everybody is understanding? So remember, your trading P&L account captures the transactions of entire year. Clear? Everybody? Yes. So if you open a P&L or trading account, the data displayed there is nothing but the data is for entire year. Am I clear? Everybody is following? Any doubts in this? Okay, this is already done. Your revenue is recognized in the trading and P&L account. All the related expenses, whether paid or still outstanding, must also be recognized in the same period. This is nothing but your matching concept they are trying to tell you. Matched with related revenue. Expense incurred will be matched with related revenue. Okay. All these things we have done. This part, outstanding, prepaid, abnormal loss, all these things I will discuss it going forward. Trading account is discussed. We arrive at gross profit or gross loss. Now, if you come here, if you look at trading account, all this side total done, then you will get gross profit or gross loss. Correct? So in other words, can I say trading account, if I put it in a mathematical equation, can I say like this? Sales, okay, plus closing stock minus opening stock plus purchases will give me gross profit. Can I put the equation like this? Here, from here. Okay, I'll write the equation here only for your understanding. Can I say gross profit is equal to sales plus closing stock minus opening stock minus purchases will give me gross profit. Am I right? See, what I am trying to do is sales plus closing stock will give me this total. Correct? Yes, sir. Minus opening stock minus purchases. In other words, this will give me this figure. Correct or no? So if I want to write it like this, I can write it like this for you to better understand. Minus opening stock plus purchases. Can I write it like this? On this side there is sales, there is closing stock. I will add both. On this side there is opening stock and there is purchases. I will add both. Now sales plus closing stock minus opening stock minus purchases will give me gross profit. Correct or no? Howdilloppa? Sales plus closing stock will give you this figure. Minus this figure will give you gross profit. Minus this figure, this figure, this plus this. Correct? So this plus this. If I minus these two figures from this figure, we'll get gross profit. If you break down and write the equation, will the equation look like this? If I break it down and write the equation, it will look like this. Sales plus closing stock. If I remove this bracket, this minus will go inside, minus opening stock, plus into minus, minus purchases. Sir, if you don't know these formulas, please. Plus into minus is equal to minus, minus into plus is equal to minus, plus into plus is equal to plus, minus into minus is equal to plus. This is important. Okay. Now, here there was minus, bracket is nothing but multiplication. Here, if there is no symbol, that means there is plus. Always remember. If there is no symbol behind any number, it is always considered as plus. So, minus into plus is minus. So, my chinne will be also minus. Now, minus into plus again will be minus. Is everybody following me? Okay. I'll just write down again. Sales plus closing stock minus opening stock minus purchases. Okay, huh? Okay. Now, I will help you to understand these three figures better. Okay. Come here. Suppose if I had an opening stock of 10 quantities, I made a purchases of another 5 units. How many units I have, Appa? 15 units in total. Correct or no? I am having opening stock of 10 units. I made purchases of 15 units. So how many total units I am having? 15 units I am having. Am I right? Yes, sir. Right, sir. Right. Now, you said how many units you should have? 15 units you should have. But what I am telling is, sir, but I have closing stock only 5 units. Your opening stock was 10 units. You made a purchase of 5 units. So what is your total units available with you? 15 units available. 15 units available with you. Correct? Okay, sir, correct. But when you go to your go down and see, there are only 5 units left. There are only 5 units left. Sir, what happened to rest, sir? What would have happened to rest? Somebody would have stolen. No, nobody has stolen. Nobody has stolen. Then what would have happened, sir? You tell me what would have happened. I would have sold it. ಸರ್ 10 ಯೂನಿಟ್ ನನ್ನ ಹತ್ರ ಇತ್ತು ಆಲ್ರೆಡಿ ಓಪನಿಂಗ್ ಸ್ಟಾಕ್ 5 ಯೂನಿಟ್ ಪರ್ಚೇಸ್ ಮಾಡಿದೆ. ಟೋಟಲ್ ನನ್ನ ಹತ್ರ 15 ಯೂನಿಟ್ಸ್ ಇರಬೇಕು. ಬಟ್ ನನ್ನ ಹತ್ರ ಇರೋದು 5 ಯೂನಿಟ್ಸ್. ಎರಡೇ ಆಗಿರೋಕ್ಕೆ ಸಾಧ್ಯ. ಒಂದು ಸೆಲ್ ಮಾಡಿರ್ತೀನಿ, ಇಲ್ಲ ಕಳು ಮಾಡಿರ್ತಾರೆ. ಕಳು ಅಂತೂ ಆಗಿಲ್ಲ. ಸರ್ ನಾವೇನಾದ್ರು ರಿಟರ್ನ್ ಕೊಟ್ಟಿದ್ದೇವೆ, ರಿಟರ್ನ್ ಕೊಟ್ಟಿಲ್ಲ. ಮತ್ತೇನ್ ಮಾಡಿರ್ತೀವಿ? ಸೇಲ್ ಮಾಡಿರ್ತೀವಿ. ಸೊ your closing stock, if it is 5 units, that means what? Out of 15 units, how many are actually remaining? 5 units. What do you mean by that? The difference 10 units is actually sold. Correct or no? Units sold. So can I write like this? Opening stock plus purchases minus closing stock will give me units sold. Opening stock 10, purchases 5, closing stock 5. So units sold is 10. Can I say like this? Opening stock plus purchases minus closing stock will give me units sold. Don't just by heart the formula, understand the logic. 10 was opening stock, 5 was your purchase. Total how much units? You should have 15 units. But how many units you are present with? Only 5 units. That means what happened to remaining? Sold. So can you put it in formula? Yes, sir. Opening stock plus purchases minus closing stock will give you units sold. Yes or no? Yes. Now instead of measuring it in units, if you measure it in cost, let's say each unit is 10 rupees. Each unit is 10 rupees. Yes, sir. What is the opening stock? Sir, 10 units into 10 rupees, sir. What is the purchases? Sir, 5 units into 10 rupees, sir. Okay. What is the closing stock? Sir, 5 units into 10 rupees, sir. So 100 plus 50 minus 50 will give you 100. What do you mean by this 100? What is this 100? This is nothing but 10 units sold. And what was the cost of this 10 units sold? 10 rupees each. Sir, that means we sold at 10 rupees. Huh? No. We didn't sell it 10 rupees. The cost of each unit, cost andre no nagale helde. Cost means the price we paid for each unit is 10 rupees. Here, this is the price we are paying. Correct or no? Even your closing stock is valued at price we pay. So this 100 is nothing but the units sold into the cost of each unit. The cost of each unit which is sold. I am using the word cost of each unit. I am not telling selling price of each unit. I am telling cost of each unit sold. So can we say this as cost of goods sold? ಇಲ್ಲಿ ಯೂನಿಟ್ಸ್ ಸೋಲ್ಡ್ ಅಂತ ಹೇಳ್ತಿದೆ. ಯಾಕೆ? ಇಲ್ಲಿ ನಾವು ಪ್ರೈಸ್ ಟರ್ಮ್ಸ್ ಅಲ್ಲಿ ಮಾತಾಡ್ತಿರ್ಲಿಲ್ಲ. ಇಲ್ಲಿ ನಾವು ಓನ್ಲಿ ಯೂನಿಟ್ ಟರ್ಮ್ಸ್ ಅಲ್ಲಿ ಮಾತಾಡ್ತಿದ್ದೀನಿ. ಯೂನಿಟ್ಸ್ ಸೋಲ್ಡ್. ಯೂನಿಟ್ಸ್ ಇಸ್ ನಥಿಂಗ್ ಬಟ್ ಗೂಡ್ಸ್ ಓನ್ಲಿ, ನೋ? ಗೂಡ್ಸ್ ಸೋಲ್ಡ್ in terms of units. Illi, because we are multiplying with the price, it becomes cost of goods sold. Cost of goods sold. Are you understanding, everybody? Yes. Why? Because now units ige cost jote multiply ಮಾಡ್ತಿದೀವಿ. So suddenly it become cost of goods sold. So in other words, opening stock plus purchases minus closing stock will give me cost of goods sold, which is also called as COGS. This is also called as COGS, cost of goods sold. Is this concept clear, everybody? Yes. Now come back. Now look at this formula. Does this formula look like COGS? Sir, ಚಿಹ್ನೆಗಳು ಬೇರೆ ಇದಾವೆ ಸರ್. ಚಿಹ್ನೆಗಳು ಬೇರೆ ಇದಾವೆ. ಓಕೆ ಅಪ್ಪ, ಚಿಹ್ನೆಗಳು ಬೇರೆ ಇದಾವ. ನಾನು ಹಿಂಗೆ ಬರಿತೀನಪ್ಪ. ಸೇಲ್ಸ್ ಈಗ ನೋಡಿ ಸರ್, ಪರ್ಚೇಸ್ ಇಂದ ಪಾಸಿಟಿವ್ ಇರ್ಬೇಕು ಸರ್, ಇದೆ ಸರ್. ಓಪನಿಂಗ್ ಸ್ಟಾಕ್ ಇಂದ ಪಾಸಿಟಿವ್ ಇರ್ಬೇಕು ಸರ್, ಇದೆ ಸರ್. ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ಇಂದ ನೆಗೆಟಿವ್ ಇರ್ಬೇಕು ಸರ್, ಇದೆ ಸರ್. ನೌ ಕ್ಯಾನ್ ಐ ಕಾಲ್ ಇಟ್ as COGS? ಎಸ್, ಐ ಕ್ಯಾನ್ ಕಾಲ್ ಇಟ್ as COGS. ಸರ್ ನೀವೇನೋ ಮಾಡ್ಬಿಟ್ರಿ ಸರ್, ಸರ್ ನಾನು ಏನು ಮಾಡಿಲ್ಲ ಸರ್. ಇಲ್ಲಿ ಇವೆರಡಕ್ಕೂ ಪ್ಲಸ್ ಇತ್ತು, ಇದಕ್ಕೆ ಮೈನಸ್ ಇತ್ತು. ಇಲ್ಲಿ ಇದಕ್ಕೆ ಪ್ಲಸ್ ಇದೆ, ಇವೆರಡಕ್ಕೂ ಮೈನಸ್ ಇದೆ. ಸೊ ಅಲ್ಟಿಮೇಟ್ಲಿ ಒನ್ ಎಟ್ ದ ಸೇಮ್. ಇವೆರಡಕ್ಕೂ ಒಂದೇ ತರ ಚಿಹ್ನೆ ಇರಬೇಕು. ಇಲ್ಲಿ ಮೈನಸ್ ಇದ್ರೆ ಇಲ್ಲೂ ಮೈನಸ್ ಇರಬೇಕು, ಬಟ್ ಇಲ್ಲಿ ಪ್ಲಸ್ ಇರಬೇಕು. ಇಲ್ಲಿ ಪ್ಲಸ್ ಇದ್ರೆ ಇಲ್ಲಿ ಮೈನಸ್ ಇರಬೇಕು ಅಷ್ಟೇ. ಓಕೆ, ಮ್ಯಾಥಮೆಟಿಕ್ಸ್. ಇಫ್ ಯು ವಾಂಟ್ ಟು ಕನ್ವರ್ಟ್ ದಿಸ್ ಇಕ್ವೇಶನ್ ಎಕ್ಸಾಕ್ಟ್ಲಿ ಲೈಕ್ ದಿಸ್, then you can convert using minus outside. Clear? Everybody? Yes. Sir, how does this work, sir? What happens if I open this bracket? What happens if you open this bracket? Simple. Minus into minus plus closing stock. Minus into plus minus opening stock. Minus into plus minus purchases. We came back to the same equation we started with. Yes, we came back with the same equation we started with. Yes. We came back with the same equation we started with. So in other words, this entire equation, just for your understanding, I broke this down. If you don't understand this concept, let me know. I'll repeat again. I hope it is clear. It is just mathematics. Okay. So if I rewrite this equation, purchases plus opening stock minus closing stock. Is this exactly looking like this? This part is exactly looking like this. Purchases, opening stock, closing. Okay, sorry appa, adar tarane ಕಾಣಿಸ್ಬಿಡೋಣ, ಯಾಕೆ ನಿಮಗೆ ಕನ್ಫ್ಯೂಷನ್ ಮಾಡಬೇಕು. ಓಪನಿಂಗ್ ಸ್ಟಾಕ್ ಪ್ಲಸ್ ಪರ್ಚೇಸಸ್ ಮೈನಸ್ ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್, ಇವೆರಡು ಈಕ್ವೇಶನ್ ಒಂದೇ ತರ ಕಾಣಿಸ್ತಿದೆನಾ? Yes or no? Yes. So, in other words, gross profit can also be said as sales minus cost of goods sold. Can we say this? Gross profit can also be told as sales minus COGS. COGS. So don't by heart the formula, understand the logic. I don't want you to by heart the formula. ಎಷ್ಟಂತ ಬಾಯಾಟ ಆಗ್ತೀರಾ ಲಾಜಿಕ್ ಅರ್ಥ ಮಾಡ್ಕೊಳ್ಳಿ. So gross profit can also be calculated using sales minus cost of goods sold. Am I clear? Yes? Okay. So this is explained here. Okay na? Okay. Okay, let's wind up for today. I hope today's class was pretty much easy to understand, and if you are having any doubts, you can always connect and ask in the chat box as to if you are having any doubts. Am I clear? Yes? Okay. Tomorrow we shall continue with the same chapter. Thank you guys. Take care. Bye bye.